Hello and welcome back to the channel. I have an interesting video for you today. So on yesterday's video we learned how the money system works and its impact on the market. Let's now dive deeper to see the direction the market will take in the future. As we all agree, we are now in a bear market and the bears are making money, while the bulls not so hot so, except of the pigs they are getting slaughtered. So if you are a bear, congratulations. Let's continue. We start reading that more and more banks are expecting the Federal Reserve to raise interest rates. For example, Bank of America expecting 7 rate hikes, Deutsche Bank expecting 5 rate hikes, Goldman Sachs are expecting 5 rate hikes. So we all agree that the Fed hikes in 2022 is going to happen. Okay, if we take a look at the yield curve, we see that it starts to flatten, and if we project the interest hikes, the yield curve might invert. That means that the 30 years will yield less than the 10 years and the 10 years will yield less than the 2 years. This will cause in the end a stagflation, which no one wants right now. So more and more voices are asking the Fed to engineer a soft landing of the bubble so that the stock market and the economy will not crash. As a fact, we heard yesterday Atlanta Fed President Boystick putting on the table a 50 basis point first rate hike to psychologically shake the high valuation in stocks. As a starting point, this would tighten the financial condition aggressively, so the Fed would not have to be aggressive in the next meetings. This might cost the stock market a 20% decline in March, but after that the hikes will be not as important as the first one. This sounds like a reasonable thought from the Atlanta Fed president to deal with the problem instead of kicking the can down the road. And in my opinion, this will work because, as we see, a hawkish stand from the chair Fed Jerome Powell and other presidents pushed the financial condition to be tighter, according to Goldman Sachs. So you can imagine if the first hike will be 50 basis points. And the psychological warfare is already working, pushing the forward price-to-earning ratio down as shown on the graph of the Nasdaq 100. It did went down and we are at the level of May 2021. So what we understand and get from all this, especially for the bull. We predicted in previous video that a short rally will happen, and we saw a massive dip buying from the retail investor, assuming that we have reached a bottom. Not gonna happen. We are still far from the bottom and the bear rally will resume. With that being said, let's start with the market coverage. And here you go, the Dow Jones is up 406.39 points or a gain of 1.17%. The Nasdaq is up 469.31 points or a gain of 3.41%. The S&P 500 is up 83.70 points or a gain of 1.89%. A good rally yesterday in the market. Let's take a look at the performance. All the sectors closed on the green side, so there are no laggers and all of them are winners. Let's take a look at the futures. We'll start with the energy for today, February the 1st. And we see that everything is down in energy, and the lagger is the natural gas with a decline of 2.05%. Softs, coca, cotton, coffee are on the green side, sugar on the flat line, and losses for orange juice. For the metals, We see all the basic material sectors are on the green side. Let's take a look at the grains. We have gains for soybean meals, wheat, corn, canola, and losses for rough rice and oats, and soybean oil is on the flat line. Let's take a look at the heat map of the S&P 500 for the last day. We see green all over the board with technology on the green side, communication service, Google and Facebook winning big, consumer cyclical with Tesla rallying 10%, real estate on the green side, consumer defensive, basic material, healthcare, financials, industrial, everything, all the board is green except of few names such as Pfizer, which is down by 3.02%, and CVS Health Corporation, which is down by 2.53%. Let's move to the chart analysis. 30-minute time frame of the SPY. We see the rally, strong move to the upside with a topping in the MACD and almost crossing lines, and with an overbought territory on the RSI. This might indicate that the SPY is topping now. We might see a pullback or another leg higher to reach the resistance of 455, and then we would expect a cool down on the SPY and move downward. Let's go to the Qs, the Nasdaq ETF. The Nasdaq ETF has run yesterday impulsively. We have the MACD line are start to crossing with the green histogram bar as getting shorter and shorter. We reached a overbought territory on the RSI. This all means that a pullback in the future is imminent. Let's go to the IWM. The IWM, same story, massive rallying and topping in the histogram of the MACD and overbought territory. We might expect a pull down in the IWM. Let's take a look at the VIX for our time frame. As we expected, after the fact the lines crossed and the histogram start changing to the red color, we see that the spike in the VIX cooled down and it started its move downward. We are not in oversold territory and the MACD lines are still pointing downwards. We expect that another move down in the VIX. Let's take a look at the dollar index. The dollar index is crawling downwards back to the support of 96. We see a topping in the MACD and the histogram bars are getting shorter and shorter, and we see the downward move on the RSI. That means that the dollar index will move lower. Let's take a look at the gold. Before that, let's take a look at the 10-year yield. The 10-year yield is continuing its move downward. Maybe it will reach the support of 1.70%. Let's come back now to the gold. The gold got its confirmation from the dollar index and the 10-year yield, and it starts its move upward. We have reached the oversold territory and the RSI line is pointing upward, as well as the bottoming on the MACD histogram. This indicates that the gold will have a run and more gains will come to gold in the next few days. Take a look at Bitcoin. Bitcoin chart is still playing the bear flag. We see that the volume here is decreasing. From the time we had the strong sell-off, the volume is decreasing. There are no new Bitcoiners, no blood coming into the into Bitcoin to push the chart aggressively upward. We'll expect more downward to Bitcoin, as I explained in previous videos. Let's take a look at single stocks. Apple chart, it has a good run. We stopped at the level of $174.78. We see the MACD line after the fact they bottomed. There is another crossing, as well as a change in the slope of the RSI. That means that maybe here will be some kind of top for Apple, and the next move will be to the downside. Let's take a look at Tesla. Tesla, we see a bottoming on the MACD lines and a crawling up from the oversold territory of the RSI. Would expect that there will be more gain coming to Tesla till the resistance of $995. As usual, let's take a look at AMC. AMC is creating a bottom as it's shown on the histogram, and the volume is decreasing. The apes are not willing to pile up and buy the stock, even though we saw a small rally on AMC, which took it from the bottom of 1339 and stop it at the level of $16.06. My expectation for AMC is that more pain to come in AMC. That's all I got for you today. Thank you for watching, thank you for listening, and we will speak soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.